Hey, happy Monday, everybody. This is Lisa Hill, and this is our Mortgage Monday. And I have with me Patrick Lewis, and we're going to talk today a little bit about down payments and things like that. But to kind of piggyback off of last week's show, last week we talked about how people didn't realize they could buy. So, you know what? I'm going to turn the floor over to you, Patrick.
Hey, thank you. How are you doing today?
I'm doing great. I'm actually at a Facebook Live seminar today.
Awesome. I saw that pictures on Facebook. It looks busy, so congratulations on that.
Yeah.
Okay, so last week we talked about 22% of renters. The Path to Buy homeownership study said 22% of renters can buy, but they really don't know it.
Right.
What is the part that they don't know? So Lisa, you and I got together and said, why don't we, instead of the 30,000 foot view, why don't we elaborate on that?
Okay.
Like we said, there's myths out there or misconceptions about down payment amounts, about credit scoring, about job times, and about properties.
Mm-hmm.
So as we discussed, maybe we'll drill down on that. And today, maybe we'll talk about a little bit about the down payment piece.
Okay.
In order to buy a home, you're going to need to have a down payment. First of all, one of the misconceptions out there is that you need 20% down.
Right.
Although that could be true, there are 20%, the good thing about putting 20% down is you do not have to pay mortgage insurance. And then obviously your monthly payment's lower, just being that you paid more principal right out of the gate. But for all intents and purposes of renters looking to buy, there are programs, FHA, government type programs that you only have to have as little as 3.5% down. You can do 3% down on conventional, you can do 5%, 10%, different down payments on a conventional piece. But what are our ways to get that down payment amount? So I've come up with 4 basic ones. We can kind of discuss in detail offline if anybody has any questions. The basic ways to get your down payment is you can have your own money.
Right.
People have their own money saved. Like I said, let's say if it's a $200,000 loan amount, you're talking about $6,000, $6,500 of down payment money. How do you get that? Well, you can have it in your own bank account. The trick is you need to have most of that money in for the last 60 days. Seasoned, we call that. You have to have seasoned money in your bank account. You can add as you go payroll deposits and any deposits that you make that can be sourced, meaning we get a copy of the check and see, we always going to verify where it came from.
Mm-hmm.
So you can have your own money in the bank, but you got to be careful because you can't just make cash deposits. We are not able to use those for down payments.
Right. Well, I know a second way is also your 401k. Can you kind of cover a little bit about that?
Sure. Like we said, we talked about you having your own money saved through as time goes on. You have your money accumulate in your bank account as long as we can source any deposits that you put in there. 401k is another piece. People don't realize that, but it's called a hardship. It could either be a withdrawal or a loan against your 401k. The great thing about borrowing money against your 401k is you actually pay it back through your payroll.
Right.
And we do not count that in your qualifying ratio. So it's not an extra monthly payment that we count because it's your money. But 401ks are, talk to your financial person that's the expert on it if it makes sense for you or not. But they are called with most employers a hardship withdrawal. So you can withdraw a certain amount. They're not going to let you withdraw all of it, but there's a certain amount, depending on the terms of your 401k, that you can take out. You don't necessarily have to be going through a hardship. They just call it a hardship to borrow, to take the money out to buy a home.
Okay.
So it's mostly usually a primary residence. Like I said, know the terms. But a 401k is a good way if you feel that the money you're making your 401k is good, but you actually can satisfy some goals buying your home and still using the equity to appreciate. Like I said, talk to your expert or your financial advisor. But a 401k is a great way to borrow, to use money for a down payment.
And you need to allow extra time, because if I remember correctly, I had a customer who actually did that. And so there's a little bit of extra paperwork and things that you have to do to send to the company. I know NewView is one of them that I've worked with in the past.
That's a great point. So if you're in the loan process and you determine upfront that we're going to use your 401k, we need to get your documentation, your last month's statement. Usually it's quarterly, but if you can grab one for the last month, and then we want to see what the terms are. There's paperwork that the company will give you to show you what the terms are. We have to have the terms. If we get that up front, we'll know, and that can be part of your loan approval, pre-approval up front, your loan approval process, and it'll be subject to the actual withdrawal.
Okay.
The actual withdrawal can take up to 10 days.
Right. Yeah.
Some are overnight, and they'll just pop that money in your account. Some take 10 days. So we have to build that in to, in the loan process. If for some reason you withdraw it and for some reason the loan doesn't work, or it ends up not working, and you're not closing for other various reasons, you can put the money back in. So we do need a lot of head time up front. That's a really good point.
Okay.
Another way that's really good that people don't really think about, but you and I have done this quite a bit, or even a mixture of it, is you can get a gift from a family member.
Right.
It has to be a blood relative, or the exceptions to that is maybe a mother-in-law by marriage, the brother, a sister, an uncle. So it has to be deemed a family member. We simply go to your family member. They say, we're going to give you $10,000, let's say. We get a gift letter stating the amount that they're going to give the relation to the borrower, and then what bank account number. So we can verify on an FHA loan, we need to get a bank statement for the last 30 days to verify that donor has the money to give you.
Right.
Conventional loan, that could actually be wired straight to the title company, and we don't verify that. So by statement. But it has to match, the wire amounts have to match which bank account was on the gift letter and so forth, and we're careful about that. But a gift from a family member, doesn't matter what loan it is acceptable.
Okay, awesome.
As a form of down payment.
And you can do that with either FHA or conventional loans?
You can do it on a VA, you can do it on a USDA also. Okay. Sometimes you can use part of your 401k and partly a gift. We did that last month where there was some 401k, some gift, and some the borrower had in their own bank account. So there's different ways, and we can piece them all together as long as it's documented correctly. Okay,
perfect. Well, I do know too, and we're in the Orlando area, and today I happen to be down in Sarasota. But I know up in Orlando we do have down payment assistance programs. Can you kind of talk about that a little bit, Patrick?
Sure. More details. Last week we touched on it a little bit, but there are down payment assistance programs out there. The parameters of them are there's a minimum credit score to it. There's a maximum household income. Let's say that you have a husband and wife on a loan, buying a house, but it's only the husband we're using on the loan because the wife's credit may not be there and so forth. Depends. One of the pieces of the puzzle is we figure out the best way to put them in position to buy a home. Sometimes it's just a single borrower, even if they're married. If that's the case, in a down payment assistance situation through Florida Housing, which is what I actually provide, which is the most common, we still have to use and gather the maximum household income. So a borrower may be making a certain amount of money, but we do have to look at the co-borrower. Let's say it's the spouse. We have to look and get their income documentation, not to use to qualify for the loan, but to see if it hits the maximum income requirement for Florida Housing. So I think I just saw this morning some new parameters came out. I think the norm is $73,000 for a household income from a family of 1 to 2 people. Different amounts from 3 to 4. Well, that could mean children, okay, not income earners. So it just depends on it. And there's a kind of a formula on the average they've made the last 2 years, what they're currently making. There's a formula that Florida Housing uses that we will calculate for them. We have to gather all that documentation, but yes, there is down payment assistance available if you qualify, and through Florida Housing, it's up to $7,500.
Okay, well, and this is great information just from the video that we did last week, because there's a lot of people out there that they say, I don't have any money, I can't buy a house, and that's not true. I think this is really great information. Is there anything else that you want to toss out there, Patrick?
No, I mean, you touched on a good point. They say, I don't have enough money, but they don't know what enough is. They may have some, but they may have access to other money that they're not thinking about, which falls in the 22% of some of the renters that can buy, but they don't know it. So on the down payment piece and cash in the bank, it can be misleading. We've had it before. I mean, you and I have had it before. They don't think they have enough, but that's why we educate and ask them, well, do you think your parents can help? Maybe you qualify for down payment assistance? Do you have a 401k? And some people have accumulated enough money for that. So I just think to make sure that don't count yourself out yet. You may be able to buy, but you don't know it. Some of the other things that come up on money for down payment is people like to sell things. They sell a boat, or they sell a motorcycle, or they sell stuff on eBay, or they have a big garage sale and take the money and deposit it. We have to be very careful with that, because it's, like I said, we're talking about sourcing it. You can't take a bunch of money from a garage sale and deposit it. It's a cash deposit. We can't use it if we can't prove the viable source that it came from. Selling things is okay, selling boats and cars, but you have to be careful, because really, what do we know the value? What is the value of those items? You have to have a bill of sale. We have to go back and make sure that what you got for it is a reasonable price. It's not an inflated price, or it has to all make sense. Right. Just careful. So it does happen, and I thought I'd bring it up now, that cash deposits are you can't source, but selling things and so forth, if you do it, put it in your bank and wait 60 days. And when you apply for your loan and those 60 days with a bank statements just show a big amount in there and not the deposit, you're okay. It has to be seasoned if it's not documentable. Right.
Well, I think this has been really good information today. Just, like you said, piggybacking off what we did last week about, we have a lot of people out there that don't realize that they can buy a house. And so I'm going to just end on saying that if you don't think you can buy, you need to contact your realtor, and then I will put you in contact with a person like Patrick, who is an expert in this field. And, he can, we've gotten some things done that we didn't think we could get done, but we got them done. And so anyway, well, Patrick, I'm going to sign off because I'm going to have to go back into this seminar. I'm going to be back in Orlando tomorrow afternoon, and then I'm back off in Daytona doing another seminar on Wednesday. But awesome. Yeah, so I'll reach out to you at the end of this week. We need to have a happy hour or something coming in here.
I'm in. Sounds absolutely. Good luck out there.
Well, thank you so much for joining us today, Patrick, and I'll see you back in Orlando.
All right, sounds good.
Okay, bye-bye.
Bye.